Good morning, investor and corporates. Welcome to SET Digital Roadshow Quarter 3 2021 Performance Review. This session will run about 45 minutes, including Q&A. Company will start the session by 30 minutes presentation, followed by 15 minutes Q&A. During Q&A, investor may leave your questions in the meeting room chat box or use your raise hand function. We will open your microphone so you can ask the question to the company directly. May I now invite NR Instant Produce Public Company Limited to start the presentation, please.
Hi, Sawasdee Krap. Good morning, good afternoon, good evening, wherever you are. My name is Dan Pathambanich. I'm CEO of NRF, and I'll begin sharing. Can everybody see my screen?
Yes, ka.
Okay, great. Okay, so welcome to our presentation of our company. Just for those who don't know us, so this is a very short capture of our company. So our auditor is EY. We listed in October of last year. Our chairman Kun Kesla was former president of the SET. We run good governance within our company. So we're very CG focused with a best practice separating chairman and CEO. We are just incorporated into the THSI, ESG, the SET 100, and we've been featured in many media outlets. So I want to just recap. We're very much focused on our mission, which is how do we transform the world for inclusivity and sustainability. And we're very much focused on the challenges of feeding 10 billion people by 2050 in a world with not sufficient arable land. And more importantly, a world which is fighting climate change. And this is a very key theme of ours as we move forward. We have three primary verticals that we focus on. So the manufacturing of ethnic foods, plant-based foods, and functional foods. And we do this in a manner that's very much focused on ESG. And we report quarterly our triple P performance, which is planet, people, and performance. Planet, as we move forward into 2022, will be one of the most important metrics that we measure our success, and which is basically how many metric tons of carbon are we able to reduce and then eventually sequester on our path towards being carbon negative. And carbon negative essentially means we're removing more carbon emissions than we are emitting from our operations. We've been focused on, actually, we've been looking and quite focused on decarbonization since 2018. I had some comments on why I keep on talking about climate change, and I want to spend just 1 minute addressing why. Back in 2018, when we first signed up to the 1.5 degree pledge, the UN Global Compact, and then we sought to be carbon neutral, we sought a path towards being carbon negative. And the reason we did that is we've already seen why the world needs to change. We saw the impacting of the impact of climate change. We also saw what would happen once the regulatory regimes as well as countries start to basically apply compliance markets as well as carbon tariffs upon carbon intensive countries and industries. And we did it, one part was basically how do we competitively differentiate ourselves from a carbon footprint perspective? Because the future will be about carbon labeling. The future will be about how carbon efficient you are. The future is going to be how can you be outside of carbon taxation once that comes about. As many of you might know, carbon taxation is already starting with the carbon border adjustment mechanism in the EU. The US is already talking about it. It's going to happen around the world, and those who are not ready will definitely be within the tax regime. We believe our operations will be outside of the tax regime, and we will be probably one of the few companies where we can help investors decarbonize their portfolio input, as well as we expect to generate money from actually decarbonization and our carbon footprint. And so I want to quickly recap why base our business model and how we're going to do that. And essentially, we are selectively vertically integrated, operating a low carbon food platform. It starts off with specialty ingredients, plants, specialty ingredients such as Thai herbs, such as hemp, and it focuses around a global platform for regional production across our verticals, so plant-based ethnic foods. And we view this in a way which is technological driven and a service platform for our clients around the world. We also have brand as well within our portfolio with a strong focus on how do we efficiently distribute products to end consumers through e-commerce. So I wanted to very quickly, briefly describe our company structure today, starting with our goals. So in 2020, we closed a financial year with 1.4 billion baht. We've allocated another 2 to 3 billion baht over the next 24 months, in which we believe we're going to grow our revenue to 4 to 5 billion by 2023. The focus of our capital investments will be to expand our margin, increase our market share and sales, as well as focus on our triple bottom line growth. Our company, first vertical, plant-based foods, everything that's in alternative proteins and plant-based is under our subsidiary company, wholly owned, called No Foods. No Foods' focus is building OEM capacity for plant-based foods around the world. We also have a joint venture with PDT Group, which is 50/50, called NRPT, which is set up. I'll go more into that in a moment. Within e-commerce, we have a company wholly owned by NRF called NRF Consumer. So all our e-commerce initiatives are under this company. Today, our company has two primary focuses. Number one is buying great top-selling brands on Amazon. Number two is also buying e-commerce off Amazon distribution channels. And we did that in Q3, where we bought Indeem, which is a multi-level direct sales marketing online platform, doing about a little under $10 million in revenue per year. In functional, we have a company 100% owned called Superplants, in which we acquired a company called GTH, which focuses on hemp and CBD. We recently did a deal to sell 25% of GTH, booking a gain of 400% on our investment. Within ethnic, we have a company called City Foods, specializing in ethnic and specialty foods. And recently, we set up our own corporate venture capital fund called Regeneration Capital. Now, one of the reasons we did that was to capture some of the gains that we've invested in within our ecosystem. And so, for example, we had a 450% gain on our investment in Boosted e-commerce, which was our e-commerce investment. And we booked a 400% gain on our investment in GTH. Moving forward, we believe starting from January of next year, we have a variety of different investments that are strategic within our ecosystem. We will begin to sell as these companies raise capital. So we plan to sell 10 to 20% of our holdings in startups as they go through each funding round, allowing us to realize outsized gains if they meet our revenue target. Our revenue target is about 5 times return. So if they reach 4 to 5 times return on our capital, we will begin to start selling down our investments. So let me start off going deeper into ethnic foods. So within ethnic foods, which still represents 80% of our revenue, we have a variety of different products within ethnic foods. In fact, we produce more than 2,000 SKUs across for 200 brands, 27% of our own brand. We've recently launched into China and Thailand as well. And the take-up has actually done a lot better than we thought. We're now launching own brand within Russia and in North Scandinavian region, Europe as well. We are also transforming one factory, which was underutilized, into a specialty pet food company. And eventually, within 3 years, we plan to take this into a plant-based pet food play. Currently, the way that we did it was we took our factory, which was 80% underutilized, and we injected it into another company called Botany. Botany has $300 million, 300 million baht, sorry, I wish it was dollars, um, in back orders in order to produce specialty pet food. In functional, through with hemp, we've had tremendous progress in terms of our pilot. So I'm very happy to report within hemp, we've got almost like a 1 acre pilot that's up at Khon Kaen University. Our seed strain, which we have a license to import from the United States from our partner, is tremendous. Our grow in terms of the flower, in terms of the plant, by Khon Kaen University researchers, has said it's second to none. It's flowering it's flowering very well. The productivity is great, and we're collecting our first CBD from flower actually this month actually. We plan to now grow up to 200 rai, which is about, I think, 80 acres in January, to expand our footprint. We largely have not provided any guidance in terms of financial performance for hemp. The reason we haven't provided any guidance is because we would prefer, rather than unlike other companies, we prefer to be more conservative and be sure that the seed strain that we brought in from the US, as well as the quality that we're going to extract, actually is able to deliver against our internal forecast. And we're very happy that we are exceeding from a genetic perspective in terms of our seeds. As mentioned, we've recently tied up with Australia's Capital. We've sold 25% in a share swap to them, in which we expect to realize about $3 million in profit from the gain in Q4 of this year. Australis is great. It's run by a CEO called Terry, who used to be CEO of the world's #2 cannabis CBD hemp company in the world, called Aurora. And we believe that we're going to get a lot of experience from them. Our primary strategy in terms of CBD is to be the most cost-effective CBD manufacturer in Thailand, using their technology, and they've got awesome technology. I'm pretty surprised on what they have, and pretty excited in what 2020 will hold for us. In terms of e-commerce, in terms of our strategy for acquiring top-selling e-commerce brands, so basically only on Amazon, top 5 within the category with a massive review mode. We bought 3 brands so far. We've got 2 deals under negotiation, and we're starting now to work with our existing brands in terms of manufacturing product for them. We purchased, as I mentioned, a non-Amazon e-commerce distribution channel called Indeem, which adds about 20 to 25 million baht in revenue per month. The way we view basically e-commerce is this internally. And so we look at basically, if we had owned these brands on a 12-month trailing basis, what is the performance? And so if we had, this is how we track performance. So on a TTM basis, on a 12-month trailing basis, total sales for e-commerce would be 753 million baht, with brand EBITDA of 190 million baht. This is very important as we look towards potentially an IPO of our e-commerce company in the next 3 to 5 years. It's also very important from a valuation perspective as we grow our business. So now to plant-based, which actually takes a lot of my time. And so we currently have announced a restructuring of our plant-based business, and I'm going to go to that in another slide. I want to announce, very happy with progress with our joint venture with PDT Group, or Innobic. And we're currently now in the process of building our facility in Ayutthaya with its first phase of 3,000 tons. Everything's on schedule. We're also very excited that we're going to launch our first plant-based supermarket in Q1 of next year, which is on the main road of Sukhumvit, and we're looking towards expanding that footprint together with PDT. With Nove Eats, a company that we had launched with an executive team from McDonald's, we launched our currently cloud-based QSR. So basically, it's like a plant-based McDonald's that's 100% plant-based. We launched that in October, and the performance has been actually has met expectations. And we hope to launch then QSR shops in 2022, as well as the focus of Nove Eats is actually growth in North America. With Implant and Bean, We got our BRC approval in September, and now we're ramping up production, even despite COVID issues. And we're very happy. We're back on track to where we want to be, and we have an exciting vegan line of products that's about to be launched in Europe. And so, for those of you who've seen our presentation, this is our facility in the UK. It's the largest in Europe. Cold frozen facility here is going to be very important because clients will be able to store material. The land is big. It's 70 hectares, so it goes to the tree line. And this is our factory, which is the largest by capacity in Europe. So this is Plantain Bean. Just to put this in perspective, our facility. In our old facility, which was 3,000 metric tons, we basically had two cooking lines. In this particular facility, we have actually more than 24 cooking lines within the facility. We're also working with startups within our portfolio. I had a question which posed to me, and I forgot that we should be updating investors. One of the key theses of why we invest into startups, why we have an accelerator and venture capital funds, is we hope to work with startups to ramp up and scale around the world on our OEM platform. So we hope to be 60 or 70% OEM manufacturing and then 30% brand. We're currently working with several startups such as Wicked Kitchen. We believe Wicked actually will be our largest single client by revenue by next year. We're launching Wicked within Southeast Asia, as well as we're going to start producing their products in Thailand for their markets in America and within Europe. They've had fabulous traction within Sprouts and Kroger's in the United States, as well as SLK in Finland. And so the heart of plant-based, and I want to provide an update on our production capacity, is really setting up manufacturing capacity in key regions around the world. And we've been talking to customers, and they have provided fabulous feedback in terms of what the value added we've been trying to provide, which is basically how do they stay out of tariff regimes, as well as how do they from a carbon emissions footprint and a logistical footprint, cost effectively produce in region, distribute within region. And as you know, because of freight issues, this is a very relevant discussion at the moment as to how do you not pay for freight and how do you create a resilient production footprint. I'm also pretty excited to say that we've now entered into we're now entered into a binding term sheet with a very famous plant-based brand in North America. I cannot name names, but I do want to flag this because if we do complete this deal, we would require an AGM to approve it due to the size. This deal will not be dilutive to shareholders, nor will it significantly increase our leverage. We have a pretty exciting strategy in terms of how we're going to do the deal, which will consist of equity plus a share swap at No Foods. It will catapult us into one of the top plant-based companies within North America. And so I want to talk a little bit about our restructuring and why we did this. So we're currently No Foods is basically No Foods Thailand, and No Foods Thailand owns everything. Part of our plan, which we plan to do for a while now, but we haven't done it, but now we're doing it, is to set up No Foods as a global company in a tax efficient manner. So we're reincorporating No Foods as a Singapore holding company, of which it's going to be held. It's going to own basically 4 different sub-holding companies. These subcos will be regional based. So Hong Kong for North Asia, the United States for US, Thailand for Southeast Asia, and selectively some North American ventures such as our VC and accelerator investments due to the double taxation treaty between Thailand and the United States, and Holland for basically Europe. We believe that with this structure, No Foods will be in a position. I do want to FYI, now that where we believe within the next 12 to 18 months, we will begin pursuing aggressively a potential liquidity event on a U.S. stock exchange. So I want to also highlight why we set up Regeneration Capital, which is an NRF basically corporate venture capital fund. So it's 100% owned by NRF, and it's composed of a Thai holding company as well as a Singapore holdco as well for our portfolio companies. Number one is for us to capture from a P&L perspective return gains on our returns on our investments. Number two is so that we can attract talent because we will be providing a very small amount of carry in a PE manner to our management team. As you know, organization is extremely important in terms of team, and we've been looking at how do we attract some of the best people in the industry into our company. We believe that this is one of the best ways to do this. Recently, we had sold 10% of our equity stake in Boosted Commerce, and we had almost a 5 times return from that investment. Unfortunately, in our old structure, that return went directly to shareholders' equity rather than as income from a P&L perspective. Moving forward, as Boosted raises capital, for example, in the first half of next year, as we sell into their new funding rounds, we will be able to realize these returns from a P&L perspective. And so I want to end with basically 2 more slides before I hand off this to our CFO. And so for 2022, where do we see our priorities in terms of our targets? So for us, from a revenue perspective, we will continue to drive synergies from our portfolio companies, such as Wicked, such as Prime Labs, which is our e-commerce brands. And our synergies will be how do we scale them out, how do we manufacture products for them, and how do we distribute their brands in Southeast Asia. Number 2 is a heavy focus on our factory production footprint and executing against our 3-year plan that we announced since our IPO. From a margin perspective, it will be how do we increase our prices within ethnic across the world, and which we've already started to do, which will improve margins. How do we reduce our costs and be more productive, and also to be more productive by scaling out similar products within our own production facilities. We'll be focusing market share as well within US and Europe. It will be very focused within US and Europe for market share, looking at accretive acquisitions as well as marketing spend, specifically within social media. We're going to be focusing with our key partners within these markets, and most importantly, it will be about climate differentiation. How do we differentiate against our customers? Against our competitors from a brand perspective as well as an OEM perspective. And I can tell you right now, over the next 12 months, all our clients are demanding it now from a B2B perspective, OEM perspective. And I believe that when in a B2C perspective for brand, within 24 months, our carbon footprint will be one of the most important differentiating factors as well. And I also believe that within the next 24 months, climate will actually be a new revenue generation business for us moving forward. From a balance sheet perspective, we still continue to maintain that we'll be financially prudent. We're pursuing different IPOs for our portfolio companies. And so, as well as selling certain stakes as they meet our IRR targets, generating liquidity for NRF moving forward. I want to end before passing to our CFO, touching up on logistics and Delta. And so I think we've seen the full impact of the container issue in Q2 of this year. And in Q2, just to refresh everybody, 20% of our revenue was delayed into Q3 because of container freight issues. It didn't actually impact our margin. It just impacted our ability to ship. In Q3, that 20% dropped to about 16% of our revenue was rescheduled into Q4. And so what's that telling us is as governments are cracking down and improving supply chain issues, we're seeing the peak that's already happening, and we're already seeing now our ability to basically deliver, get improve quarter by quarter, and we expect to improve quarter by quarter over time. Um, Lastly, I want to note with regards to COVID, we were severely hit for about 3 weeks due to Delta, which caught Thailand off guard. Now with vaccination, we believe we're ready for even a Delta plus variant. Our factories are 100% vaccinated. We had 3 weeks downtime in our production facility, which was unfortunate. Otherwise, we would have had even a better quarter for quarter 3. And we don't foresee any significant COVID impacts moving forward. And with that, I'd like to shift to our CFO
Thank
to
you,
go over the
King Dan.
financials.
Okay, I would like to wrap up or summarize Q3 performance. Okay, there are the 5 issues to be highlighted. The first one is investment, as you can see from the condemned report. We have the acquired the Indian group is direct sales in Thailand, and in USA we have acquired Belpat and in September, and then we have sold the boosted e-commerce for our investment at 10%, which we have gained on the selling it on of the investment at 38 million baht. We record in equity in the balance sheet. And secondly, we convert the product rapidly from the soybean meal to the pet food business. Therefore, we sold this business out. We have to get at 21 million. We book it in the other income in the P&L. And we have the debenture issue in the third quarter, which have a financial cost occur. And then the second issue is the sales volume increase for the Q-on-Q and year-on-year. 15% for the Q-on-Q and 36% on the year-on-year. And for the year-to-date, we increased 48% in every category except for the ready-to-eat in Q3, and for the year-to-date, every category and every region is increased except for the Asia. For the Asia, for the 9 months, we slightly decrease. And then the third one, the Asian rate is better from the Q3 due to the Thai baht depreciation. Then go to next slide. And then you can see the ethnic food. For the ethnic food, with our sales in quarter 3, as I mentioned to you, we increased from the Q-on-Q and year-on-year, both of the quantity. And then we can go to the next. I'm gonna wrap up faster. And then for the SG&A, for the next issue is the for the gross margin. The gross margin increased due to the business, the e-commerce business, and the Asian rate which is better. Therefore, the gross margin at 41% is higher than the Q-on-Q and year-on-year, and including for the year-to-date also. Next card. And the SG&A increase for the Q3. Due to we combine due to the e-commerce business, which we have to pay the platform Amazon fee, and then this quarter we have the higher promotion also, and then the commission is increased from the direct sales business, which we record in the third quarter, and then for the year-to-date, the SG&A increase from the last year. This one additional for the salary increase also because we have to include for the city food and then the NRF ourselves, and then we increase for the headcount also. And then the Planet Bean, the last one, the issue is the Planet Bean loss sharing from this one in Q3 compared with the last quarter is decreased at 5 million, but compared with the last year in the same quarter, we increased the loss 16 million. For the 9 months, the loss sharing from the Planet Bean increased for 40 million. Therefore, go to next slide. Net profit share, the EBITDA and the net profit gonna show in the slide to you. The net profit normalized net profit gonna be increased Q-on-Q 177%, and then year-on-year is almost 8% for the year-on-year at the Q3. And then for the financial status, go go fast เลยค่ะคุณแดน For the financial status, we have a strong financial. We have increased for the cash and the same way with the debt because we have the bond issue, or the debenture issue at the 700 million in Q3. Therefore, the current ratio, you can see the current ratio is improving from the next for the financial ratio. You can see the current ratio is improved from 1.1 last year to the 2.3 this quarter. DE ratio improved from the 1.3 last year, same to the 0.7 for the third quarter. Net debt to EBITDA is 0.2 is improved from the last year, and same thing with net debt. I'm sorry, net debt to equity is improved from the 0.8 to last year to 0.2 in this quarter, and then the net debt to EBITDA is a 1.2 for this year. Compared with the last year, is improving. And then the outlook, Khun Dan would like to say something about the outlook.
So I'll summarize in 30 seconds. And so we maintain a very positive outlook for 2021. As you can see here, our targeted growth of around 45 to 50% growth. We also believe that we can maintain this CAGR over the next on a forward basis in 2022. We also still target in terms of a margin perspective for 2021, somewhere between 9 and 12. I want to say quarter four historically tends to be our best quarter, and it looks like it's going to be for a variety of different reasons. And so we continue to maintain a very positive outlook. Especially because of the weak bot, very strong demand, better freight management and situation, as well as a variety of different factors we've already mentioned. If anybody does have questions, just give me a shout out. So, we're continuing trying to improve our presentation format. So I hope this format has been easier to understand. I apologize for those who don't know our company, whether I've skipped important information from a background perspective. I would like to say this. Having been at COP and now involved in many conversations, both in Thailand, in North America and Europe, with respect to climate change, this is definitely one of the most important challenges of our time. It's going to affect industries and fund managers institutionally a lot faster than what you think. The Thailand Prime Minister announced a more aggressive net zero goal, and he's going to have to announce even more aggressive goals moving forward. I believe this is going to affect many industries from across the board, most importantly within food and agriculture, because it's the most difficult to change. What you're going to see is, from our perspective, is plant-based is basically the end of the value chain for us in terms of decarbonization. So as you eat, you're decarbonizing. Upstream agriculture is where we see the decarbonization is going to happen. And that's going to be a very significant value add as well as a revenue generator for us moving forward. And with that, I believe our time is up, and I would like to thank everybody, Sawasdee Krap, Khop Khun Krap, for joining our digital roadshow. Thank you so much.
Thank you, NRF.
Thank you very much, Khun Dan from NRF and all investors. So we come to the end of the presentation. Thank you very much for investors who joining this session, and we look forward to see you next quarter. Thank you very much.
Thank you.